the show right now. Ashi, hi, afternoon. Let's address the positives right now. The fact that crude has seen quite a bit of cool off. The fact that Indian markets also have had a very resilient reactions to what's been happening at the LOC. And the earnings so far, Ashi, other than very, predictable candidates, we've not seen very huge disappointments in the earnings so far. Where is it that you're finding fresh investment opportunities right now? Or would you say just wait it out because you don't know how the India-Pak situation is going to pan out, and maybe the market may get a little bit more choppy from here?
Yeah, hi. So firstly, thanks for having me on the show. If you're looking at the market outlook, I think there is a kind of decent combination of both positives and negatives. You did mention kind of oil prices coming down, interest rates have been cut twice, RBI is infusing liquidity into the system, FI flows have kind of turned positive. All of these are kind of relative positives, and also valuations have come off a bit post the recent market corrections. So while there are positives in the market, I think we are still choosing to be a little conservative. We are watching quite closely the entire India-Pakistan LOC situation to really see how that develops. We really hope it does not escalate any further than what we're currently seeing. But that is clearly a near-term uncertainty that can impact the markets. The other important element is just the whole Trump trade aspect is on pause for now, but we really do need to see and understand how things are going to evolve. These are two key uncertainties. You did mention corporate earnings. I think it's fair to say that while corporate earnings, we've not seen any major disappointments, but by and large, earnings have been muted. You aren't really seeing clear signs of growth anywhere. So while the interest rate trajectory has clearly improved, I think before we get a lot more positive, we are going to wait for greater signs of growth to come back, and also some kind of clarity around just how the India-Pakistan situation is going to emerge, as well as what's happening in terms of Trump tariffs.
There's also the SIP number which has come out, and there every time I look at the number, I would say bravo. 24,000 crore approximately every month, and this one is net inflows into equities, and then one is SIP flows. Net inflows is a function of lump sum as well as what happens in terms of in and out of the schemes. But bravo guys, bravo, 26,000 crore. This month of April was a tricky one to call. There were tariffs, genuine fear in the world, genuine sell-off in the market. It was not one of those garden variety correction what we saw in the month of April, and despite that flows were strong. February, March, you want to say something?
No, I was just saying that I was looking at the classification also as to where the SIP flows have come. And if you look at the categories, Nikunj, large cap fund inflows higher on a month-on-month basis. Small cap fund inflows, again, flattish one can say on a month-on-month basis. Mid cap fund flows, again, just a very slight bit of dip. But flexi cap is where a large chunk of money is been flowing in. So large caps, flexi caps, that's where you've seen the inflows come in.
You want to say bravo again? I'll tell you why.
Yeah,
because
absolutely.
Yeah, I mean April was a genuine month. At least first 15 days were nothing short of a horror movie. The tariff come into play and everything just got smoked up. And that's the time you would hear whisper numbers. Oh my God, am I doing the right thing by putting money into into equities? So all that fear of God kind of a feeling was there in the month of April at least. Despite that, flows are strong, and flows have been strong into small and mid cap also. So the turning point, Aisha, is this: that there's a time when FIs were buying, DIs were selling. There's a time when FIs were selling, DIs were selling. Now it's the FI buying and DI buying. No IPOs and no liquidity event, so to speak, which is really having impact on the market per se. I think that's the point I just want to bring out. I want to get Jatin here to talk technicals, and then I'll go back to Ashi again. So Jatin, tell us the technical setup. Things are looking slightly rusty today, or if I may use the English word, tardy for the bulls. Have we hit a peak in the near term, closer to 24,200, 24,300?
Good afternoon, everyone. So, as rightly pointed out, today things are looking a little weak. On the weekly charts, today we have the weekly closing. So on the weekly charts, it's forming an engulfing bear candlestick pattern. So technically, it's a reversal pattern. We have seen 4 weeks of up move, and thereafter around that 61% retracement level 24,500 we are witnessing sharp selling pressure. So technically a bearish pattern is being formed on the weekly charts. Apart from that, the India VIX is closing above 21.5 levels. So that is again a sign of near-term volatility. So what we conclude here is that yes, things have been there has been a weakness news flow which is leading to this weakness, and structurally also we have a bearish pattern in formation. So yes, on the downside, the next crucial supports that we are expecting is 23,500, which coincides with the 200-day exponential moving average. So that is the near-term support area that we are looking out for. And on the upside, we believe that 24,200, 24,250 is likely to act as a very stiff resistance going ahead. So these are the some of the parameters that we are closely watching out for over the next few trading sessions.
Ashish, so you do manage a fund which I remember invests in digital companies. After the recent run up, what's your view on stocks like Paytm and Zomato?
Also, this is a space, we really see this as one of the most attractive investment opportunities of the decade. I think more than kind of the recent run up and what valuations are right now, if you just step back and understand what's happening at a larger macro level, new age digital tech businesses have the ability to kind of create solutions for consumers that are much more efficient ways of transacting than traditional ways. It is much easier to order food on Zomato, Swiggy as compared to the traditional way of calling the restaurant and having a delivery person from the restaurant deliver food. The same can be held true for kind of payments via Paytm or PhonePe, booking a cab via Ola, Uber. You're seeing a massive value migration away from traditional businesses towards these new age platforms. And this, according to us, is something where you're still in relatively early stages of. We see this kind of supernormal growth, the 20-25% kind of very consistent high growth rates of these kind of platform businesses sustaining well into the coming decade. These businesses have already turned into very large businesses. And if you continue to compound at this kind of a base at these very high rates, these are going to be some of the largest companies in India. The growth is something which I think a lot of people do understand, but what a lot of people do tend to underestimate is just how significantly profitability of these businesses can kind of improve as these businesses mature. There are very large parts of the cost structure that are specifically linked to this current hypergrowth phase. As you move into some level of maturity, the kind of levers that these companies have to both increase monetization, reduce costs, and overall improve margins and cash flows leads to kind of, if you look at kind of our profitability projections 5-7 years down the line, they're very, very healthy in terms of levels of margins, level of cash flows, etc. This combination of supernormal growth and a shift towards high levels of profitability are a very strong combination of kind of value creation. And therefore, we believe this decade is really kind of, it's kind of, this is the decade for kind of digital platforms to kind of generate value and create wealth for investors. Now, within that context, while they were available quite cheap a year and a half back when we launched the fund, and valuations have kind of gone back towards kind of normalcy, even a bit expensive. But given the kind of overall growth outlook that these companies have, we continue to see this as a very, very attractive longer-term investment opportunity.
Okay, scanning through the gainers and the losers today. Just bear with me for a second. There you go. Not too many. Just bear with me, sorry. Drone companies have gone up today. Yes Bank has gone up today. There is constructive price action in Apollo Microsystems, Wellspun Living. The whole tariff is at play. The big outlier for me today is Yes Bank. And Jatin, technically, how's Yes Bank looking on the charts? It's a stock which, in a sense, is the most active stock when it comes to the retail activity.
Yeah, see, if I look at the near-term charts of Yes Bank, it has managed to surpass the 200-day moving average, and it's sustaining above that. So I believe that there is scope for further upside in the counter towards 22, 22.5 levels on the upside. If someone is taking fresh long positions at current levels, then he should maintain a stop loss of 18.5 for his long. So yes, there has been strength in today's trading session. We expect the momentum to continue on the upside.
Yes, Bank, there's L&T. And Jatin, I want to get you in on the charts of L&T as well, because this has been a rank underperformer. After the earnings, you are seeing a big move on L&T, but does it seem like the breakout is going to sustain?
See, in the case of L&T, we believe that yes, there is upside towards 35-30 on the upside. So we believe that yes, there is still more room of around 2 to 3 odd percent in the case of L&T, even from current levels. The breakout that has happened today is sustainable, and we are expecting a move towards 35-50 on the upside.
Swiggy numbers are also due today, and good old comparison between Swiggy and Zomato will always happen. Now you got to bear in mind that Zomato numbers were not extraordinary. Slowdown happened in the food business, and Blinkit is going to be in this investment process, which means that for next 2 quarters we may not get anything large in terms of a big surprise coming from there. Ashi, is it time to flip Zomato to Swiggy now? It's available at a 50% discount.
So we're not very sure. As in, we find both of these as very attractive kind of plays. Food delivery obviously is a business which has matured and is very attractive from a longer term perspective. Quick commerce is something where it's really extremely scalable and a very, very large business opportunity. Now, when it comes to kind of quick commerce, investors are going to have to contend with losses increasing in the near term. Our own assessment is that the next 2 or 3 quarters, losses are going to increase. You've already seen kind of for Blinkit go from about 100 to about 180 crores. We believe losses could increase further as these companies continue to kind of roll out aggressively and really try to capture as much of market share as rapidly as they can. But this is really the kind of digital playbook when there are these large opportunities that can be serviced by digital platforms. It is a kind of very often a winners take all kind of market. The markets tend to evolve into strong kind of duopoly or 3 or 4 key players that control the entire market. It's a multi-billion-dollar opportunity. You're looking at kind of a shift of overall grocery and various other consumer segment spends towards quick commerce. So it's a space that we believe these companies are going to continue to invest in, but has the potential to create a lot of value going forward. When it comes to kind of Zomato versus Swiggy, that 50% plus discount that a Swiggy kind of trades at to a Zomato is probably kind of well deserved. If you look at the relative kind of growth momentum, the different levels of profitability, right? And if you just step back a bit, Swiggy was the first to actually start food delivery. Zomato has moved ahead of them. Swiggy started Instamart before kind of Zomato went out and acquired Blinkit. Blinkit is considerably larger than Swiggy's Instamart as of today. Profitability on both the food and the kind of quick commerce business for Zomato is superior to that of Swiggy. If you actually take into account the differential in terms of scale, the differential in terms of profitability levels, and also overall execution, the 50, 55, 60% kind of a valuation discount, according to us, is broadly appropriate. At kind of current levels, we hold both Zomato and Swiggy in our portfolio. We continue to see both of them as very, very attractive longer term plays, but it's not between the two. We probably still have a slight preference over Zomato. But if Swiggy were to be able to get its act together and to narrow the kind of execution gap to a Zomato, this valuation discount could clearly have potential to reduce.
Actually, so good having you on the show today. Jatin, you too, thanks for your time as always. Just 2 minutes left to go before we wind